Hello, dear fellow traders. In this video, I want to explain how to use the Sniper Option Forecast app or SOFA. First, I would like to start the argument with one of James Simon's quotes in 1999 when he said, "We make our forecast, then shortly thereafter, we reevaluate the situation and revise our forecast and our portfolio. We do this all day long. We are always in and out and in. So we are dependent on activity to make money." So I try to use this notion in designing my quantitative approach to trading options in the option market. First, I want to explain why I chose these 20 tickers. These 20 tickers are the most traded asset in the market and most traded options in option market. Triple Q SPY, Apple and Tesla combined make more than like half of the value of trading in option market in 99% of the days. So this is really important. Why? Because the higher the volume in option trading and the underlying asset makes it more hard to get manipulated and manipulate the price by some um, big investors and market makers. On the other hand, it makes the option trading cheaper because the spread will be much lower. For example, if you are looking at SPY triple Q and Apple options, in most of the time, the the spread between the buyer and the sellers is around 1 cent or 2 cent. And for Tesla, it's no more than 5 cents. But if you are looking at some other asset in this list, like Moderna, it could be somewhere between 20 to 50 cents per contract when you are trying to trade those options. Or for BABA, it's usually around 10. For ExxonMobil, it's around 10 cents. For Nvidia, it's around 10 to 20 cents. In this list, my favorite tickers are Triple Q, SPY, Apple, and Tesla. And if I want to pick and narrow it down, it will be Tesla and Apple because these two are the most traded asset. Apple is the biggest company and is one of the most predicted asset in the market. So now I want to talk about the instruction how to use this. The first one is the most important one. Opening new position based on this forecast model between 9:35 and 11 in the morning, which means the first 90 minutes of the market, and for 14:30 to 15:55, which means the last uh, 90 minutes of the market. So these are the time frame that try to trade. Why? Because they are the most active time of trading in the day, especially the first part, which we usually see the highest move and highest volatility in the shortest amount of the time in the first hour of the market. So this is also very important. Why? Because we want to pay less time premium. And by less time premium, actually we eliminate one of the factors that is against all those people who buy options, which is time. Time, regardless of direction of the market, is always working against you if you are buying call or put option. So the goal of this system is to make the most money in the shortest amount of time. Sometimes when I'm using this system, I close my position after the first 90 minutes and reopen it at a different price or at a different strike at the last 90 minutes of the market if the trade is still in the same direction or if the direction is changed. So be careful about it because it will increase your performance a lot. So try not to open new position outside these two time frames. The second and the third column in this list, as you can see, is last price, which shows the last price of the underlying asset and the percentage of change of that day. The fourth is the probability. So, based on the calculations that this system doing, it calculate the probability of the underlying asset, which could be bullish or bearish. This is really important because sometimes you see something here is called do not trade, which means that asset is uh, the probability is bearish or bullish, but at that day market is choppy for that asset. So, or the volatility is so high that you shouldn't trade these assets. This is really important. So be careful with this. This system define three different action: buying call, buying put, and do not trade. If it says do not trade, please do not trade, even if the probability is bearish. In the fifth column, you see the risk of opening a new position. It could be low, medium, or high. Why there is this um, three levels? Because we don't have any trade without any risk. So be aware of that. Any trade has a risk for you. So this risk is calculated based on the most recent volatility in the market and the move in today market. So this is really important. I myself trying to open new position when the risk is low or medium, and usually avoid the high risk position. So try to be careful about it and just use it when the risk is lower. In long term, it will help you a lot. In this part of the this system, you can see the time of the last update for these data, and you also can see what this system offers you. The first and the most important thing is that this system is never recommend to short call or put. It is only for buying calls and buying puts. Why this system is designed like this? Because when you are shorting options for a limited amount of premium, you are exposing yourself to unlimited risk. However, when you buy options, no matter it is call or put, for a limited risk, which is the premium that you pay, you are exposing yourself to unlimited profit, which is really important. So if you are looking at this, I usually recommend that do not short call or put options for a limited amount of premium. You're exposing yourself to unlimited amount of risk unless you are using more sophisticated option strategies to limit your risk if the price go against your prediction. So please be aware of that. The expiration date is usually the last day, the last day of the week, which is the upcoming Friday. But for triple Q SPY, you can use um you can use the daily or uh, tomorrow's option. Like 5 days a week, the options are available to trade with expiration date, but I prefer to trade the Friday one, so to have more time if the option goes in my preferred um, direction. In the position size, you see the calculation of 0 to 3%. So this is like one of the most important part of this chart. Whenever it says do not trade, the amount of capital is zero, so it is very important. It's the amount of capital is based on the percentage of your own trading capital for option trading. This is really important. Why is this important? Because if you take very big position, it actually makes you close to what we call it gambler's ruin. So you will ruin your account very fast. This, however, if you are looking at this option, this position size sector of this chart, it shows you also uh, how strong the daily momentum is, because when the momentum of that ticker or the underlying asset is stronger, it offers you to take bigger position. When the momentum is not very strong, it offers you to take a smaller position. So please be careful of this. Based on this, the optimum position will be a position that the percentage change probability is in the same direction. For example, like Tesla, if you're looking, the change is positive, probability is bullish, the new position is medium risk, which is acceptable, and it offers you to buy the call first in the money or out of money call option. The expiration is 1 January 27, 2000, and 2% of the capital. Holding overnight is not recommended. Why? Because we are going to have the earning calls today after the market is closed. And another important thing about the overnight holding is that there is certain situation in the market that increase the chance of having a positive day after a positive day, or having a negative day after a negative day, which is less than 55% of the trading days in the market. I repeat that. I discovered something incidentally that increased the risk of having a similar day after a positive day, or a negative day after a negative day. This is very important part of this, so please be aware of that. Holding overnight is positive sometimes, and it is negative, and it is almost always close to each other. So this is something that is a question, and I tell you this, it was a data driven forecasting system, which I find incidentally, but it works very well. So please be aware of that. Now let's go to the instruction. The instruction for using this system. So we try to open our position in the first 90 minute or the last 90 minute of the market, and try to close it before market close or before that 90-minute uh, close. On the other hand, we have the how to select our position. If you are a big risk taker, you can pick the first out of money, and it is more rewarding. But if you want to have lower risk, you can buy the first in the money, either call or put options. On the other hand, uh, we have 25% stop loss for the entry. So when you open a new position, put your stop loss in the system. Please put your stop loss in the system for 25% or what you can afford to lose. This is very important. I believe the most or the best size of the position for anyone is the amount that they can lose without getting emotional. This is really important. So, this amount of money is different for different people, and it depends on their total asset under management and total wealth in life. For some people, they can afford to lose all their money and not getting emotional. This is not the story. I If you are picking position based on this system, please follow the position size rule. For example, if you have a 10K account and the position is 1%, but that 1% is more than 1% of total capital for trading, you are not allowed to do that. If, for example, you want to trade Tesla option, which is around like 700 a contract, your account needs to be 35K at least to open one position in Tesla, which is like 2%. This is really important. So one way to manage that is to play with in or out of money, because sometimes you are not qualified for the in the money, you can pick the out of money, but it exposes you to a higher risk level. That's something that you need to understand. So please have your stop loss of 25% of your entry in the system. A stop loss is the only thing that save you in this market. Target could be plus 100% for many assets, and I pick these assets because they move in one single day or in 2 days, and the change in their underlying option could be more than 100% a day, especially for Apple. With 2% movement, it moves more than 100% for sure. The underlying option moves, the first in the money or the first out of money option usually moves more than 100% and Apple moves 2% a day. So be aware of that. The target price is plus 100. And one more rule that help us to keep a bigger portion of our profits if in the middle of the day market start to move against us. Trailing a stop loss. So if you're buy option, either call or put, and your position went to 30% of profit, please change your stop loss to your entry after the first 30%. Then if it moves 60% from your entry, move your stop loss to 30%. If it goes up to 90%, move it to the 60%. Or this amount could be different based on your risk tolerance, but we use trailing a stop loss as a profit protection plan. So there is a risk that option market works against you and you need to change your position. But trailing a stop loss help you to save a big chunk of your option profits. So please do that. Risk of deviation from the forecast model. There are few situations that expose you to higher risk, and these are the most important one is holding overnight. Sometimes you slip and in the morning you see market opens with a big either bullish or bearish gap. This exposes you to a risk if you hold options overnight. You can make huge money and lose huge money if the market open against your position. So this is really important to know that holding overnight and over weekends are against you. As a general rule, I never do that. In most I unless it says holding overnight is yes. And there is a huge momentum in the market. So please be aware of that. Holding overnight is only allowed if the system tells you to do that. And this gives you an edge of more than 55%. Earnings expose you to a huge volatility, and anything can happen during the earning. So I don't recommend to hold for earnings. Some other data can cause huge volatility during market hours. These are interest rate decision and FOMC meetings. Whenever the chair of Fed, Jeremy Powell, is behind the podium, markets start to move widely. And it is I can show you I posted many data driven charts based on this that during Chair Powell speeches the volatility in market is going above 200% of the usual volatility in the market. So this also exposes you to a huge risk. However, if you are on the right side of the trade, you can big with big money as well. So this is what I want to share with you about SOFA. This system is the best for day traders, not swing traders. Those who have enough time to watch the market in the first 90 minutes and the last 90 minutes of the market. So this is not a good system for you if you have a full-time job and you can't watch the market. Thank you so much for listening to me. If you have any question regarding this, please make comments. I will try to answer your comments. And this system is only available to those who are subscribers of the Platinum tier on Patreon. So the Platinum Patreon are those who have access to this system. It's a huge game changer because it provides you a standard forecasting system regardless of emotion. It detects the change and volatility in the market, and it tries to put you on the right side of the trade. When the market is hugely volatile, it can ask you not to trade at all or offer you the best possible trade. And it defines the risk of trade for you. Thank you so much. I wish you can use it and make good profits. Wish you a very successful trading year.